The first half of 2020 brought about tremendous changes. The ESG space had its own changes to contend with, accelerating new trends and provoking major changes. That's what we saw in the ESG space. So now, what are the top themes that are dominating the agenda of ESG investors as we approach the last quarter of 2020? We'll be discussing what we see as the top 3 trends you should know about with Dr. Barnabas Acs, Refinitiv's Performance Director of Sales for Investment, Advisory, and ESG. The first big theme that we can't ignore right now, Barney, is the climate transition theme. So let's discuss that and let's look at it from a regional perspective. Barney, what are your thoughts there?
Hello, happy to be here. Thank you for the question. So, of course, there are going to be winners and losers in the space. Because it depends how quickly you adapt, and of course how smartly you adapt. The impairments that we are seeing currently, in the cases of Total, BP, and for example, according to a Evaluate Energy study for the U.S. Energy Information Administration, that states that publicly filed financial statements of about 40 oil producers have shown that collective write-down was around 48 billion in the first quarter of 2020, one of the largest ones in quarterly adjustments since 2015. So lower oil prices and coupled with the risks of being a stranded asset is hopefully going to initiate changes, and the timing maybe is right to do it now.
So we have the lower oil prices, which that's a clear assumption I think most people would agree with. What other assumptions can we make around the shift to renewables and greener economies as we head into 2021? What are we pretty certain about?
Look, as climate change and of course the publicly noticeable elements of climate change like heat waves, severe weather events are strengthening. Of course, public push is going to be bigger and bigger. We are going to see the decade of the 20s with incoming enforcing regulations where you actually have to make changes, and this is going to be also the decade where we see actually happening and during COVID that shares or companies with more sustainability focus have performed better during the pandemic downturn are going to couple up or strengthen each other, the main thing I think that would transform or would lead the transformation or transition to a more climate resilient future is of course stewardship of listed companies that would force shareholder resolutions on reporting and action, and of course this severity of shift is going to be, measured or manifested in the seriousness of actions. There are a couple of encouraging trends. Of course, there are more and more communications about dated shifts away from fossil fuels. One of the most sort of prominent ones is, of course, BlackRock's sense of a purpose letter a couple of years ago that was also strengthened lately. The outspoken change was also coming from the Church of England Pension Board that stated that starting 2023, the church will also sell shares in fossil fuel companies that are slow to respond to global warming. Of course, they keep the door open, but these are serious commitments. And it's also interesting to see that in this area, one of an early 2020 studies from the FT showed that the stewardship teams have increased significantly over the last 3 years, on an average 70%. But for example, in the case of previously mentioned BlackRock, their kind of stewardship staff alone went from 26 to 47, which is almost doubling up. So I would believe that in the case of public companies, of course, self-interest will be coupled up by the push of the stewardship and investment directions of asset owners and investment managers.
So those are great use cases around the stewardship piece. I know that definitely is going to come into play in larger numbers as we head into 2021. Are there any other sort of game changers that come to mind when we think about climate transition? When I say game changers, what is it that we are not expecting that might just happen due to other factors?
Look, I mean, obviously, game changers are quite rare because these are the early bird companies, and of course, game changing is a combination of both external requirements and internal motives. One of the best use cases in this case, going from a very dirty sort of stigmatizing company, the DUNG Energy, which is the Danish oil and natural gas company, transforming into a basically a global wind power giant called Ørsted. That's what we mention as a good example. Of course, the naysayers or challengers would say that it's easy because it was a state-owned company and all the transformation happened before them going public, and the same couldn't happen in case of a public company, in France called Engie, which actually this year retracted from the sort of the renewables vanguard strategy sort of, as they saw that selling coal assets and nat gas assets would severely affect their share price. So it's obviously a very interesting balancing game between externals and internals, and of course short term and long term, and the big winners are going to be the ones who actually can balance these or come from outside.
I love the way you put that. It is an interesting balancing act when you look at long-term and short-term, as well as those internal and external variables and factors. Thanks for sharing that. As we move on into the second trend, we are seeing that ESG practices are being adopted in even larger numbers than before. No big surprise there. The surprise comes in, I guess, the numbers. ESG funds saw inflows of $36 billion in Q1 of 2020, and there's definitely not much of a slowdown going on. The same is happening with fixed income markets. Now, green bond issuance keeps growing, while the social bond market has soared 43%, which is just astronomical. So let's talk about the European Union specifically. They've recently released the EU Green Recovery Plan aimed at encouraging economic recovery in their member states, now mainly through funding and support of sustainable initiatives. Some of the areas mentioned are innovative clean technology projects and transport projects. So Barney, I'd love to get your thoughts about the future of those specific initiatives, as well as the EU taxonomy altogether.
Yeah, let's hope that it will play out in the best. in the best way possible. EU is definitely the leader in sort of a top-down approach in the transition to sustainability. The EU has the framework for sustainable finance that basically is the manifestation of the strategy that is driven by the EU Commission with Ursula von der Leyen at the helm, and of course supported by the ECB with their communiques, especially in the last half a year. all this sustainable finance framework has multiple pillars. A few of these are the EU taxonomy that you mentioned, that is a tool to help investors understand whether an economic activity is sustainable, and aims to establish a common language, which is actually kind of challenging sometimes. The other important one is the non-financial reporting directive that aims at the transparency of operations, i.e. the ESG aspects of companies on corporate level, so that decisions that we discussed earlier can be made about a company on an investing level. One of the other important legs, if I call it the third leg, is the Sustainable Finance Disclosure Regulation that introduces the disclosure obligations on how institutional investors and asset managers interact or integrate ESG factors into their risk management processes, and of course there is the benchmarks regulation amendment that creates two new categories of low carbon benchmarks. One is being the climate transition benchmarks, and the other one is being the Paris Agreement aligned benchmark. The PAP, and of course the latest packages that we have seen in the budget can be referred to as again astronomical, as you just mentioned with the other numbers. If I remember correctly, the number is 1.9 trillion that is to be spent on those infrastructure changes and making sure that the transition is a just transition, not just a transition or not just a recovery. Sorry, it's a just recovery, not just a recovery. that was mentioned.
We follow you there.
Yeah,
we follow you there, Barney. Definitely. And I want to get to the U.S., but I know we're throwing a lot of numbers, so I just wanted to source the 43% that we spoke about earlier regarding the social bond market that comes from NN Investment Partners. So just want to make sure that we folks are able to go and check out some of these numbers we're talking about. But let's head into the U.S. and even Asia. We talked about the growth, the strength that we see with the EU. But when it comes to the U.S. and even with Asia Pac, can we expect this same sort of growth in the near future? Are there regulations that are being designed to support this in those regions? Yeah, I mean,
of course, the two other regions are different beasts because, for example, in the States, there seems to be a discrepancy between the central governmental initiatives and what happened on the public company space and on lower state or municipality level. Obviously, we know about the Department of Labor's proposal on the ERISA, which is basically stating that private employer-sponsored retirement plans are not vehicles for furthering social goals or policy objectives that are not in the financial interest of the plan. Rather, plans should be managed with the unwavering focus on a single very important social goal, providing for the retirement security of the American workers. Now, you see that also what hopefully transpires from our conversation, the two go hand in hand together. So if you think today and don't think about in a long-term holistic view, and you think that the oil as it's now cheap is the investment of the future, but it becomes stranded within 5 years, then I'm guessing that the whole kind of long-term social interest of that investment is becoming a very serious financial outcome as well. So that's on the sort of the negative end, I would say. But on the other hand, there is the Network for Green Financing System, I believe, the NGFS. Network for Greening the Financial System, the NGFS, which is basically a network of national banks, central banks, and earlier this year, one of the Fed board members, directors indicated that there might be joining this kind of initiative. So, and of course, not mentioning the other numbers that, for example, the numbers that you mentioned around green financing sources and vehicles, the state is actually coming second as using these green financing mechanisms. Not on a state, not on a federal level, but definitely on a corporate / state level. APEC is interesting. They are coming somewhat late, but of course there are revolutionary actions going on. China, on one hand, is embracing it. On the other hand, challengers could say that the whole Belt and Road Initiative is basically an exportation of not the most state-of-the-art and future-proof technologies. So nothing is a clean-cut situation in the other regions, or not as straightforward as it would seem in the European Union, at least.
So that's great, and that's a great segue when we talk about clean-cut and what's uniform. That takes us to our third theme, and that is ESG standardization and ratings. I know that you're seeing quite a few developments there that are looking quite positive in terms of really clarifying those standards as well as ESG ratings. Tell us about those.
Wow. I think we actually see a proliferation of those. I think we might see actually more coming before the dust settles and we really get down to a few. There are a lot of initiatives. We know already about We Mean Business and the science-based targets, and of course in the news we see that Morgan Stanley has become the first major U.S. bank to join the Partnership for Carbon Accounting Financials, and we begin measuring and disclosing emissions generated by businesses that needs assisting in lending and investing, and of course there is for example our initiative as well, the Future of Sustainable Data Alliance, which is aiming at similar things, just much more broader than the carbon itself. Of course, on the company level, there is the Transform to Net Zero Coalition, which is spearheaded by Microsoft, and of course there are a couple of other big players like Mars, Danone, and Mercedes-Benz membering these, all these initiatives are aiming at a specific task, sorting it out on a local / industry level, and hopefully we will see more holistic frameworks, especially after the regulatory clearings, so to say. One of the holistic examples is actually our latest reports, the Sustainable Finance League Tables, that provides a view on the debt markets, on the ECM, on mergers and acquisitions from sustainability angle, and provides real insights into the latest happenings there.
Wow. So these organizations all have a combined focus, and likely we'll see greater power because they're all aiming for the same thing, which is tremendous. Dr. Barnabas Acs, thank you so much for joining us on the podcast. We invite you to subscribe to the Refinitiv Sustainability Perspectives podcast on iTunes, Spotify, or wherever you stream your content. What did you think about the podcast? Leave us a review on iTunes or follow us on LinkedIn and Twitter for updates on our show. You can even check us out on YouTube now. Thank you for joining. See you next time.